Well, we're right back up here with a cross trade. The previous trade we lost went all the way down to 86, 1 point above where our initial target was going to be. Well, I was about to take a short here at 93.75, but while I was talking and didn't press the button, we'll take a look. I like that cross trade there. We're going to go short right here. We're going to take the 93.75s for our fifth snippet of the day and see where that takes us. I'm going to take the 93.75s, what I said, 93.75s. Short 2 at 93.75. And of course we're going to follow our typical protocol, buying one at 92.50 and then putting our target on the other down toward the mean, maybe at 87. We clicked down to 92.50 but didn't get filled. We anticipate getting filled here. So while we're waiting to get filled, and once we do, of course, we'll put our stop at 93.75. The other trade that we lost 4.5 points on, after we got out, the market proceeded to grind down to 86, I believe. 80. What was the low of that bar? Was 86. 86.50. 86.50. It got within a point of where we want, or less, of where our original target for that second contract would have been. That would have been a 10-point trade, and we didn't get it. But the market did come down. The error we made was twofold. A, we didn't have a high with our rewind. We didn't have our total volume at price chart, our footprint chart up, so we were unable to see that volume cluster, which correlated to a 2 TPO area, the B period and the C period. On yesterday's profile, 115 was the 1397 to 1398 range, and sure enough, that's where the market went to. Couldn't get into the single TPO print on the A period above that, and that trade, if you had a trailing stop, could have easily been a 7 plus trade. Now here we are with short 2 at 93.75. We're back to where our entry was. We're going to stay put here, anticipating a rotation back down toward the mean. If we can better our position, we will, but we'll do it above the L period high by just a tick. If we get into the 95s and see cross trade, that's our area for maybe bettering our position. Otherwise, we'll stay tight with our 93.75s and our first target exit at 92.50, our second target exit at 87. Alright, there's our fill on 92.50. So we have 1.25 points there. And our stop now is buy 1 at 93.75. It's a hard stop, and our target is 87. Well, we clicked down here to 87.75 relatively quickly. We didn't reach our target at 87, so we're going to be patient here. There's hardly any volume. Look at the volume on this. 0, 1, 19, 42, 13. It's going down on nothing. I'm not sure what to think about that. I'll have to think about that for a minute to get a thought about it. Our trailing stop strategy, we're actually going to do that real quick. We have a 6-point range, so we're only going to tolerate 3 points on the upside from the low. So if it gets to 90.25, we're going to exit the market on a stop, or excuse me, at the market. If it gets to 90.25, our entry was 93.75, and the low was 87.75. So just with quick math, that's about a 3-point retracement. 93.75 minus the low at 87.75. Divided by 2 is definitely 3. So 3 plus 87.75 would actually be 90.75. So we're going to exit at the market at 90.75 if the market gets up that high to protect our profit. This is the first time I'm actually implementing this protocol. We're 2 ticks away from 90.75 at the market, so we'll see here, you know, if that actually facilitates more profit, or if in fact that disallows us from reaching our profit target at 87 for that additional 6 3/4 points. All right, it did not get up to 90.75, so we are in the trade, and it did not get down to 87 either. It got down to 87 1/4. So that leaves me in a position that we are unfilled, and approximately still the same trailing stop protocol, if we keep it in place, would put our stop at 90.75. So once again, we got within 1 tick of our exit target. That's out of several trades, that's happened several times. We'll have to just try to keep a mental track of that. I'm not sure what to think about that. We sure do get awfully close in our targets. I know yesterday and the day before we had the mean as our target, the point of control. That's a visual point, so that may be in fact a bad location, especially on an even number, as many people are going to be attracted to that visually. So we might readjust that and maybe use a fraction above or below. Probably it depends on what side of the market you're on, of course, and see if that changes our target fills for the better. For right now, since we didn't hit 90.75, we'll see if we can't tick down to 87 and get filled. Otherwise, we anticipate a fill at 90 3/4. All right, there's our fill on the stop. We got stopped out at 90.75. So, considering we never got filled at the 87, we came 1 tick within. I guess to this point you could say that was a winning strategy, if in fact it does get as high as our initial entry at 93.75, which is not too far away. It would have been nice to get filled a 1/4 tick lower than where the market went. Okay, while we're live here, see 93.75 is right in the shadows, right in the sights here, so that would have been our break-even stop. So in this instance, if it ticks up that high, you could say, yes, I protected 3 points of profit. Instead of giving the entire 6 points back, we gave 3 points back. I feel comfortable implementing that strategy. It's a little more challenging to make sure you don't do any mechanical errors, interfacing with the trading software, but we can manage that. And there we have it. We're going to minimize this market so we can get some work done. I have 7 observations to post today from yesterday. I want to review those snippets and see what nuances we can pick up from that, and we'll clarify that in writ, and we'll also post the 5 snippets today, and we'll look forward to the observations for those tomorrow.